Okay, good morning, everyone. Let's get going. Okay, we had Friday session. We saw a bit of a mixed bag, but more or less a real drift in U.S. equity markets. We saw the S&P 500, which finished up about 3 points on the day, so a bit of a non-event, but did manage to finish on the highs and did manage to finish at new all-time record highs and closing highs. So the bull market goes on. The Nasdaq didn't manage to finish in the green, but more or less finished flatline. We continue to see the same thing, the underperformance out of the tech stocks and the small caps and the Russell 2000 alike continue to underperform the overall market, but they did make up a little bit of ground at the end of this past week. We basically saw some economic data for the week that was a little bit mixed, with the GDP print coming in light, and we saw some better than expected jobless claims numbers. But all in all, nothing really to speak of for the entire week last week. So not a whole lot to carry over to drive stocks going into this week. Looking at the Asian session, you can see that we had some Chinese data that really drove the Asian markets a little bit, even though China was closed and the Hang Seng was closed due to public holidays there. We saw some better than expected manufacturing data there, and we also saw some better than expected PMI numbers in China over the weekend, which managed to give the Asian markets a bit of a rally. We saw the better than expected PMI numbers only today, but the other numbers coming on the weekend, and we also saw a weaker yen that kind of helped propel some of the equities in Japan. So going into corporate action, we've got Life Healthcare that's going ex-div today, 63 cents. And on other news, we saw good buddy Carl and good Phil Mickelson get into some trouble on the weekend as well. The FBI looking into the two of them on insider trading. That's very exciting. Just don't play golf and take stock tips from guys that invested in public companies. All right, we've got the key factors out today. Market data. We had some Japanese capital spending numbers that also helped propel the Japanese market earlier in the session. We also had Japanese PMI numbers that came out in line. We've got a lot of PMI numbers across the entire Eurozone throughout the day. We're going to see mortgage apps in the UK a little bit later. We're going to see PMI numbers in the UK as well. Locally, we're also going to see PMI. Those numbers come at 11. We've just seen really poor data coming over the past few sessions out of us locally, and we're starting to see the pressure come back into the rand, which will show that chart in just a little while. We've also got CPI numbers out of Germany at 2, and then the States we've got PMI as well, as well as ISM manufacturing. So a lot of data today. This is going to be a really data-heavy week, and we'll have to gauge it accordingly as we go throughout the week, and we'll be there, kind of talking you through all of the points as they come in. All right, let's get into the maps. All right, first thing that we're going to really talk about is some of the different sectors in the market, and how the kind of common theme in equity markets really is I say common theme, the most common practice is you get people who like to sell stocks that are high and making new highs, and guys like to buy stocks that are a lot lower than they had been on the year and that have kind of corrected a little bit. When in actuality, that's typically not the way to play things. That's not the way that you make real money in equity markets, especially over the short to medium term. And we kind of have seen a real dissemination happening in local equities, with the mining stocks getting absolutely pummeled here recently, and a lot of the local stocks really outperforming, especially some of the rand hedges that aren't mining stocks have really just traded incredibly well. And so the natural reaction is sit here and try to buy these mining stocks as they sell off. excuse me, and sell the local outperformers, while they're holding up, and it just hasn't played out, and that's unfortunately it's fundamentally flawed in the strategy, and we've just had so many people, that have been trying to nibble on these miners as they fall, and it's really, trying to catch a falling grand piano when you do that. Technically, the best thing to do is to sell the weak ones and to buy the strong ones, and so we're going to kind of go through some of that stuff today. I do think that we can make a case, to start to sell some of these interest rate sensitive stocks in the near term at least. Okay, the first thing that we're going to look at here is the Aussie spot Aussie chart. And we're gonna look at the recent support levels. I think I drew that a touch low. Let's pop it up a little bit higher. That first level that we're going to look at is right at about 44,800 to 48,015, somewhere in there. That's kind of our first level of support. If we can really drop out the bottom of that, we're going to look at more lateral support down here around 44,000. And I think, our market in the most recent sessions have started to finally underperform developed markets and have definitely outperformed, the emerging market space has underperformed relative to the developed markets as of recently. Moving on here, we'll have a look at the rand dollar here, or the dollar rand, I should say, and we kind of have hit a critical juncture here. This level at about 1040 is really what's very clearly cut is our massive support level. You can also make a case that sort of next level of support was down here around 1025, which we weren't able to breach when we came down and tested it as well. But either way, it doesn't matter where you want to draw that line. That's the key. That's Friday. That's the breakout that we saw on the rand. If you zoom it forward there, you can see the huge green bar, which was Friday's session. That's the dollar rallying against the rand, and this is really, really critical. We came down. We briefly got back through the 200-day moving average. We got down below the 50-day moving average, and then we weren't able to hold it, and we've just reversed back up. Looking at this chart, looking at the big picture here, the technicals on this are really showing us a hugely higher target and well up into the 11 handles on the rand. And I think this in particular can really be what will start to put pressure on your interest rate sensitive stocks into the near term. So there may actually be a play to sell some of these high flyers as of recent. The interest rate sensitive stocks that have outperformed over the last several weeks on the back of the weakening rand. I think that Jill Marcus has probably fallen behind the curve. I think she's definitely going to have to hike, and she may have to hike more than other people expect if the rand starts to get away from us. All right. Let's have a look at one of those stocks to kind of support that claim. The market may kind of be looking a little bit forward because we finally on Friday started to see a little bit of weakness in some of the banks. Seeing Nedbank dropping support here at 225, fairly clearly defined support level, and you can see right there we weren't able to really put a close in below 225 almost through that entire space, and we finally we really definitively dropped it. I think the next level of support is down here at 215. That's the first level of support, but we're going to probably look for a move from the height of this channel, which is, call it 12 to 15 rand, somewhere in there. We're going to look for it to fall 12 to 15 rand from there, which will be slightly below 215, maybe even all the way down to 210. So we're going to look for a 210 or 215 as kind of the short-term target, but we may see all the way up to 210 and testing of that 200-day moving average as we get down there. All right. If we look at some of the mining space, as we were speaking about earlier, we'll look at Anglos here, and you can really see Anglos dropped viciously out of massive support level here at about $270. Call it 269, 270, whichever way you want to look at it. You can really see how important that was, and we've really set up in a little bit of a head and shoulder pattern. Not a little bit of a head and shoulder pattern, it is a head and shoulder pattern. A little bit of a weaker right shoulder, but a head and shoulder nonetheless, and with the neckline, which you can't see even though I've already drawn it, at about 269, 270. dropping out the bottom of that pattern. That really puts us technically for a target of closer to 250 Rand, which will take us right to the 200-day moving average. In fact, I would say 247 would be the target, which is right down around there, which really takes us beautifully to a symmetrical point if this thing was to correct all the way down to about 247 in Anglos. All right, Billiton. Billiton has been in a little channel here for the better part of 2 months that we've really dropped out the bottom of as of Friday's session. I'll zoom this forward a little bit so you can see it a little bit more clearly, and you can really see there without question that Billy's dropped support. That range is about a 10 Rand range, so we're going to look for about 10 Rand to the downside from when we dropped support. Support was dropped at about, if I'm not mistaken, 333, 334. Let's call it 333. Which would take us down to about 323 as a target, and that'll also probably be close to a 200-day moving average if we pull back to about the 323 level in Billiton. All right, Barlow's. Barlow, this one, fundamentally, I think it's, you have to be a little bit wary of this one simply because I'm going to actually look at this on a 2-year chart because, the story out of China is so dire. But I do think that that's mostly priced in. You guys are very bearish on China. Everyone knows that. It's a big worry. We've seen iron ore prices which have dropped from 115 to 120, something like that, only a few weeks ago, down into the low 90s as we speak. And we really down. So obviously with their exposure to Caterpillar and the mining sector there, that's probably a big portion of this weakness. So this really could be potentially an opportunity, but fundamentally, technically, are two different things. Technically, this really sets up beautifully technically into support here, and every measure, this is a really bullish pattern for you to be buying pullbacks. We're coming in right here into support at 100 Rand, and this is a 2-year chart, so this is longer term support. You can see, I remember when we were looking at this, on the breakout probably 5 or 6 months ago, we were looking at how many times we tested 100 and failed before we broke through, which just makes it that much more significant. We're looking at 1, 2, 3, 4, 5, 6. 6 touches before we finally broke through, and then we even came back down and tested it before we really pushed up into the high 1-teens. So we've come back and tested this 100 level support, and we're coming back to test the 200-day moving average, and we're coming back to test trendline support. So all the technical factors are really lining up here. I really think that if you're looking to buy something on the support play, one of your good options, better options probably, is to be looking at Barlow's around this level. All right, we're going back into another one of the interest rate sensitive stocks. We're going to look at Woolies. Woolies, we know, made this breakout here from its from trendline resistance really quite clearly up around, I think it broke out around 73, 74, somewhere in that area. Let's look at it about 73. We're going to look at this on a more short-term chart. We're going to have a look at it on a 30-minute chart, and you'll really see this, the more recent pattern. Let me just zoom this forward a little bit so we get the candles. Really broke out of this this descending triangle pattern for the first time on Friday to the downside, and for some reason, I don't know why these charts show it this way, but you can only see that little dot right there. That's where we actually closed, just south of 75. So it doesn't look like that much of a failure until you realize that we closed all the way down there. Definitely a bit of a failure at 75. Remember the longer term chart that we just showed, that you can see that we're looking for a correction probably down to the 73 level, potentially even the 72. I would say that I wouldn't want to look at buying this thing on support in the 72. But we've dropped out of that, maybe a little bit of a short-term opportunity to catch $3 or $4 on the downside in Woolies, and if we're right, and if the Rand is really getting ready to blow out due to some of the longer term technicals that we looked at earlier, we could really see some pressure on some of these kind of stocks. The last one we're going to show, we're going to look at something on the LSE. We're going to look at Rio Tinto. We're going to look at this on the 2-year as well. This is a beautiful longer term head and shoulder pattern setting up. maybe not a classic head and shoulder, just because there's so many kind of there's maybe multiple shoulders here. But either way, any way you look at it, 31 here is a massive level of support. You can see here we have so many tests of this level. Really, the shoulder lines obviously being up here around 34, the head being up here at 36. And so if we look at that, we're going to look at about 5 rand of downside on that, or sorry, 5 pounds of downside on that target, which would take us down to the 26 bucks on the failure at 31. So I really like the downside here on Rio Tinto. Technically, the charts don't get that much better than that, I don't think. And the fact that we've dropped that level is really telling. If you've got some exposure to offshore, you can play in the UK markets. I'll be looking to short Rio Tinto potentially below these levels. Might be a decent opportunity. That's it for today, guys. Thanks a lot.